welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grubner. With me, as always, to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Although I think we're late enough, it might be good evening, but it's okay. All right, we're going to talk land values, some jobs reports, some restaurant performance index. But to kick things off, let's recap what happened this week in the markets. And really another kind of slow week for business.
Yeah, that's right, Megan. You look at the cattle side, live fed cattle, I'm going to call them up $1, but we really didn't get a lot of test again this week. So curious to watch where those prices go when we have hopefully some movement next week. On the feeder cattle side, we're going to call them mostly steady. There was some instances of heifers that were $3 higher on the week. On the future side, October live cattle futures contract was up $3.50, and the September feeder contract was up $4.40. We did see corn futures go down this week. September down 37 1/4 cents. On the beef side, choice box beef down 35 cents. That leaves choice box beef about $35.40 above where it was this time last year. On the hog side, cash barrels and gilts were down about 60 cents. October lean hog futures were also down $1.80. We did gain about 45 cents on the pork cutout value, and thanks again to what was another week of higher belly prices.
I want to talk a little bit on the hog side of things. We've seen a little bit of pullback recently. Are we watching not only availability of market ready hogs, but then also that demand picture, not just here at home, but globally as well?
Yeah, I think for sure. And again, I'll say, well, at least relative to where we were a month or so ago, we're still in a better place. But we are seeing a little bit of pullback at this point in time. I think we do have some folks trying to figure out things like Prop 12 and what it means at the end of the day. I think that's actually helped us on the belly side here for a period of time, but a little bit of uncertainty now as we look at the hog side of the equation.
Does seasonality come in? Are we getting into that point as well, kind of winding down that? I mean, well, you and I might grill all year long, but summer grilling season in general is starting to slow down maybe a little bit.
So I think that's part of it as we look ahead, and then just probably the expectation as we get a little further down the road here of larger hog supplies just seasonally will be coming, probably having some influence on these markets as well.
All right, let's take a look at slaughter numbers for both cattle and hogs this week.
Yeah, so USDA tells us for the week ending August 5th, the run of 613,000 head of cattle this week. That's down 6,000 head from where we were a week ago and down 35,000 head from last year. On the hog side, a run of 2.338 million head this week. That's down 54,000 head from what we ran last week, but 3,000 head above where we were a year ago.
As we take a look at year-to-year comparison for cattle and hogs, how are they running?
Yeah, we're seeing total cattle slaughter year to date down 3.9%, while hog slaughter up 1.3%.
I love that we're getting into this land values report this week that came out from USDA. As we take a look at these figures, are you surprised to see the gains like we have?
Well, I've been surprised to see the gains we've seen for a little while now. And when you think about higher interest rates into this picture as well, it's probably more surprising. It's interesting that you go back to 2019 and you look at overall farm real estate values, $3,160. By 2023 here, we're already setting at $4,080. So we've seen a pretty rapid increase. We got a 7.4% increase here over the last year in that overall real estate value. U.S. cropland value up 8.1. To me, that just keeps reminding me that the higher prices that we've seen for the last few years on the crop side certainly have been important to higher land values. Pasture values up 6.7, so a little less growth on that front. I'm probably more interested in, as we continue to see higher interest rates, does that at some point slow some of the growth that we've seen of late.
I have two questions in relation to that. One is a girl who's trying to find some pasture in Kentucky. This is not a figure that I really want to see this week. First of all, because it's not easy. It's not, availability is also a challenge right now.
So I think when you look at what, so I always struggle with these questions about land values, Megan, because it seems to me that where we sit in terms of land values and cash rents, whether that's crops or pasture, it's a little hard to make it all compute right now. And I think we all know at the end of the day, there has to be some point in time where the returns from the land have to hopefully pay for the investment in that land. But we've certainly seen a lot of I think outside investment in some cases pushing land values higher than otherwise would be the case.
So I'm going to throw you a little bit of a curveball, and you can say we can't talk about this, and I'm okay with that too. The downgrading in the credits this week that happened, how does that play into producers and thinking about cost and inflation and interest rates and all of the things that matter, because that carried over into on the ag lending side of things as well?
Yes, so I think generally the issue here is probably higher interest rates, all else equal. And I think, you know, one of the points being made there that reduced the rating that we got this week was associated with just the level of spending relative to government revenue. We continue to crowd out sometimes private investment with what's continuing to be higher and higher levels of spending relative to the revenue that we're bringing in. So at some point in time, one can be worried about just how high interest rates go as a result of some of those factors and what that means for land values. Now, again, I'll say, having said that, we've already seen some higher rates, and it doesn't seem to have, you know, stymied too much what we've been seeing in terms of those land values.
Because sales don't seem to be slowing.
So maybe we're only seeing the slowing in the another new record land value sale, but we're not seeing sales slowing. That's right.
Jobs report also out this week. As we take a look at that side of things, we saw some jobs added, but not quite the reports that we've seen in recent months.
Yeah, that's true. So the July report said we added 187,000 new jobs. I'll not say head this time. That was below the 200,000 kind of expected pre-report. So that again might suggest maybe some easing of things like inflation. The unemployment rate fell slightly to 3.5% in this report. When you looked at the average hourly earnings this month, really unchanged. So a yearly rate of about 4.4% on that average hourly earnings.
I think that's a critical component of this conversation as well when we're thinking about demand and talking about inflation as well. How well are wages holding pace with the inflation and the higher cost of fuel, gas, food, whatever you want to tack on into that list?
Yes, well, and so this is which is causing the other to go up, right? So do consumers have more money in their pockets because of higher wages, so they're spending more, pushing inflation higher? So there's some balance between these two things, is all I'll say. But I'd say a 4.4% average hourly rate on an annual basis. At least we're not continuing to see that rocket higher as we're seeing new jobs trying to be posted that push those wage rates higher, trying to get bodies in those positions.
Scott, as we wrap up today, Restaurant Performance Index also out for June. And this is I'm going to say this is the silver lining of the week's reports.
So when you look at that overall index, 100.2 for June, so back above where we could talk about some positives. So that, again, I'll give you, that's the positive. Expectations made up a big portion of that. Expectations set at 100.7. Same store sales, capital expenditures, those were the two biggies on the expectations side that drove it higher. The one piece that's maybe not quite as positive, customer traffic in that current situation component came in at 97.1. When you look, all right, so April 96.6, May 96.5, June 97.1. So we're seeing less customer traffic. I don't know what that spells longer term, but 3 months in a row of under 100 might be the cautionary tale out of the Restaurant Performance Index.
Do you consider 3 months a trend?
Never. I don't know what trend looks like anymore. But we do have 3 observations in a row that it's below 100. Maybe the good news is it's starting to climb back towards 100 again, but we want customer traffic. I hope that's not a sign of what will continue to be slowing traffic through restaurants.
Scott, it's always great to see you this week as we look ahead to next week. Monthly trade data, retail prices, supply and demand, and consumer sentiment. Thoughts about, I'm going to pick your brain on monthly trade data and supply and demand numbers. What are you looking for next week?
Yeah, so for me, the bigger of those two, I'm really curious what USDA is going to do with both corn and soybean yields. We've gotten rains in some parts of the country. I see a lot of different estimates out there. I think this is a tough year to call both corn and soybean yields. Just the amount of variability in a short geographic area regarding rainfall, I think makes being in the yield guess business pretty tough. But we'll get a little better insight from USDA on what they see going forward. Could have really interesting implications for where feed costs go. You know, you and I have talked a long time about good crop in the bin gives us cheaper feed costs. Maybe we're still going to get there. On the trade data side, I think here's where I'm always curious if we can start to grow beef exports as we look ahead. The pork side of the equation has been better this year, especially from a value basis, but we've kind of lagged on the beef side right now, and maybe just the high prices we have today will continue to slow that export ability for the remainder of this year.
Scott, it's always great to see you.
Likewise, Megan.
We will talk to you next Friday.
Sounds good.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And for a roundup or look back at the day's markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grubner for Brownfield.